That's it. New Zealand is giving us what we were waiting for, this resumption in the uptrend, and it flipped right here. And now we have this bullish price action, what we were waiting for a long time here on Oz New Zealand after all this accumulation and all this retracement behavior. Hi guys, welcome to the midweek analysis. My name is Dima, and let's resume where we started earlier this week with our pairs here to the right. And we have some interesting setups, some interesting analysis to look at today. And of course, today is the big one for the week. We have the big announcement from the dollar. Where is it? Here we go. So the funds rate and FOMC at the same time, the same day. So this is a big day for the dollar and many other cards, many other pairs as well. Let's have a look through our shortlist, see what's going on. And we're going to start with the dollar, of course. We still have not reached into this area right here. So it looks like we are slowly coming up into that area. It's a bit lackluster at the moment. So you can see it is just very messy, very choppy. But that is the bias for now. We'll see what happens when we get here. A bit risky, I would say, to trade with such big news this week, today. So you may want to wait until tomorrow. But nevertheless, let's plan it out. Let's have a look at possible scenarios. Okay, euro dollar, what do we look at? Well, we looked at these two levels and we are still within this range, similar to the dollar. So two ways we're going to look at this. This is how I'm personally going to plan it. Of course, you could look at your own, but this is just one possible way of looking at it. So the first way is a break higher, as we said, so a clear bullish daily break higher, closing higher. Of course, you'll have to wait until tomorrow to see that. So it'll be premature to enter today. That's just my own personal opinion. Use your own discretion for your trading. So the break higher, and if we go higher, then this will be scenario A. So that is possibility A. I'll just put that. And scenario B, of course, will be the one down here, which is the move lower and breaking lower. Well, actually, let's call that scenario C. So the break lower, and then we'll head to downside, and then the market will take its set. And then once we break below this low, then it's more likely to go lower. Now, scenario B after A would be another possibility, which is if the news spikes this high and gives us a cheaper price compared to this whole swing, spikes through it and then moves lower, then looking at a better price coming back to the level and heading lower would be another possibility. So I'm seeing these possible three scenarios, and I'll call this scenario B. And we'll have this level here. So if I take a fib from this high from that high to this low, you can see that here is the expensive area up here if we go through it, go into it. Now, let's have a look on the lower time frame. Here's the lower time frame. So here we have this second possibility, and that option B, or scenario B, I should say, we will have then this trend line and then a kind of something like this, higher. If we break through it, we'll then have a breakthrough trend line coming back to get a better price and then heading lower. So of course that would mean that the day does not close above here where we have our reference point, and we actually head lower. Of course, it could still chop around, it could do nothing, and if the news does nothing and we have no movement and no volatility, then we'll just have to sit on our hands and wait a few more days, and yeah, next week it may be clearer, but then we're going into December and it's not the best period to trade. But of course, you never know. And the market can do anything. Well, these are the three scenarios on the euro. A little bit unclear here, I would say, so it is wiser to be patient with this one. So far, it's choppy. Let's have a look at some other pairs. We may have some more clarity on the miners. And what do we have on Aussie CAD? Well, Aussie CAD, we planned for the market to come into either A, scenario A, reaction off this level did not happen. Scenario C, a break higher, that did not happen. And scenario B here to move lower and have this play out, the lower price, the cheaper price, that has not happened either yet. Now let's drill down into the lower time frame. Here's what we could see. We saw the market being here at this moment in time, and we were looking at a possible reaction here. We did not have that reaction, and we did not have a break. What happened? Instead, the market moved lower. This is where we are right at the start of the week. Instead, we moved lower, came back into this level, and now heading lower. So it looks more likely to head into our lower level, which is down here. So therefore, waiting patiently, you can see a bit of a, if you want, there's a kind of, whatever you want to call it, a kind of a squeeze. There's a bit of a triangle here. There's also a kind of a channel, if you want to look at it that way. We're still inside the channel, inside the retracement phase. So it seems more likely that it will head lower. Okay. That's what the market has shown us in terms of probability. So it doesn't want to head higher yet. Unless we have a break. So of course, here is our reference point, this break. And then once we have a break, move higher. If you look on the daily, that will be higher probability. Now, the next swing point would become this low, this high, if we go lower, and then we shall see how this whole scenario develops. At the moment, not quite clear just yet. So for now, we're still in this kind of downtrend or channel, whatever you want to call it. Let's have a look at the pound CAD now. Pound CAD is another one we're waiting for the lower prices, and here we are. We're still in this you can see the very choppy, very slow price action, just really unclear. Again, it's a kind of a, some people would call it a sort of a squeeze or a little triangle formation, whatever you want to call it. It's just very messy. Look on the 4-hour, you can see all that choppiness, but slowly moving downwards into our level here. Again, just like with Aussie CAD, you can see they did not have a break higher. We are in fact heading lower. So the market is indicating where it wants to go. Now, if you watched the previous video last week where we talked about correlation and markets in terms of pairing up certain markets, well, here's a scenario for you. So we've got Aussie CAD. As you can see, it's chopping, and we've got pound CAD, both CAD pairs. We've got pound CAD heading lower. So pound CAD broke these lows, and as you can see, Aussie CAD did not break these lows. So we expect that Aussie CAD will follow. So that is a little live example here again, based on what we looked at last week on Friday. Right, so that is the pound CAD and Aussie New Zealand. What have we got? Well, this is just what we expected. Here we are. We had this break. We also had this level that we were looking for the market to react from, and we had this big bullish candle massively reacted, engulfing 1, 2, 3, 4, 5, 6, 7, 8, almost seven candles. So big bullish price action. We are now looking at, we have another break here. We are, so that is the second time. And then we're going to look to higher prices. And this is, we looked at as a possibility. So this is kind of a head and shoulders pattern. And now we have that scenario, and we have this low now becoming the invalidation point. So we've got our targets, we've got our reversal, and yeah, this is good to go. This is the high probability scenario we've been waiting for a long time, since all of this price action, waiting for the market to come down into this area. If you remember, we were looking at this whole area. Okay, and we've got it so far. All right, so that is one to bear in mind, and a good one because it's a non-dollar pair, it's a minor pair, and therefore less likely to be choppy. I'll say less likely because you never know. Okay, so gold. Let's move on to gold and see what we've got going on. Now, at the beginning of the week, we were looking, Monday, we were here, I believe. And yeah, so we said if we break lower, we've got a pullback and a continuation, which is scenario C here, which is what we're having. However, we're coming back into the initial move, which is very, I would say, what's what I'm looking for? Not what we wanted to see, in short, because we want to see a move away. Now, if we've come back here, then this now becomes a low probability. We've got the big news on the dollar, and of course, gold linked to the dollar. So now I would say that this now becomes a tricky one and not really as high probability as it was before. So personally, for myself, if I was in this, then I would look to close it at break even because of the volatility that's likely to happen. So not really favoring this one. We've got our other scenarios here. So we've got this scenario still, we've got still this level here. So may have some volatility happen. Therefore, let's just get rid of this. This is now the high that we don't want to break. We have a possible scenario here of this level. If we have the reaction on the news, we also have this possible scenario. So we shall see when it breaks. So if that happens, then we have the move, we have the pullback to a better price, and then the continuation. Always what we wanted, what we keep doing here. And then once again, same thing here. If we have, let's draw this one again. We have the reaction of this level, move lower, pull back, and continuation. Now, if we break the high here, then we will see what happens at higher prices. We may then reconsider and look to this possible scenario. So once again, it will be clearer when the days close. If you look on the daily at the moment, these are kind of preparation points, and we'll see how it happens. As you can see, we had a swing high over here. So not looking for the market to break this high. The more favored scenario is this. So let's call this, got this really better price. So let's call this shallow move A. This next move B. B scenario, and then we've got scenario C. So let's see how the market plays out. At the moment, it's just too early to tell. We can't predict. We're just kind of looking, reassessing and looking at what the possibilities are. So let's get rid of that. We've had our break here to the downside. And now we also have, in fact, I'm going to say scenario D, because it's too early to tell. We will have to reassess. Scenario D, which is the break of this level, reaching into this target. And then that will be a break lower, and then a move to continue downwards. Yeah, we don't really want to be risking by trading news. That is a really risky strategy. But once we see what is happening, then especially with the big news like today, rate news, FOMC news, after the news, we'll have a little bit more clarity. So tomorrow you may want to wait. Tomorrow, maybe Friday, but of course, we're getting towards the end of the week and end of the real trading season into the holiday season. So bear that in mind. These are all factors and these are all things to bear in mind for your risk management. Okay, and lastly, we have oil, or not lastly, we have S&P as well. So oil, let's just go over oil quickly. We did not come into these levels. We have now moved into the first target. And so once again, did not go into the first level, did not go into the second level. And what does that mean? Well, that means we have to leave this one alone and reassess later if that's what you're going to do, because we have already headed lower. If we get these higher prices and move lower, I don't know. We shall see when we get there. At the moment, oil also linked to the dollar, and we'll have to wait and see. So another one to set aside for now. Well, we still have these levels that we can monitor if we come back to them. We have not yet closed below this low. So let's see what happens. That will give us a hint. Once we close below this low, then we will look to lower prices into the next low. So we'll see what the volatility brings, if there is any volatility, but for now, oil I'm going to set aside. And let's look at S&P. So S&P, look at that. Almost like magic, but it doesn't always happen. This is what we were waiting for. So hopefully you made use of this. On Monday right here, we looked at this level being respected. We have the move higher right off the level. And then we were saying if we move higher, we will have this. And we had a new level just like we looked at. And this was the second possibility to enter. And now we moved higher and we did run right through into and through these target points here, which was these highs. And that's what we've got, exactly as planned. So great, another great one for this week. Hopefully you made use of that. Okay, here's another invalidation, and the market went higher, high, low, higher, high, high, low, and a new higher, higher. Now we leave this one alone because, well, we have got, I believe, a real high here. We've reached our targets, and now we set this one aside. The objectives have been reached for the week. So that is the S&P, and now we're back into the dollar. Let's see how the dollar unfolds. That's your plan for the rest of this week. Once again, if you're unsure, really take care, because this is huge news, rate announcement and FOMC. It's not often we have really major news like this. Yeah, the scenarios are there. We'll observe the market. It's not worth entering prematurely. You never know what's going to happen. These are the riskiest times to trade when we've got really big news like this. All right, guys, that's it for today. Hopefully that has been useful for you. My name is Dima. I will see you in 2 days on Friday to end the week and reassess and see what we learned. All right, trade safely, guys. Bye for now.